Hello, everyone. Welcome back to the Daily Brief Recap. Your action-packed. I think we're in about 20-30 minutes a day. So, recap of what we've been chatting about at TRI overnight. Looking at levels in the market and colorful commentary by this guy called the Beamish. Anyway. So, for you guys, I really like just sort of concentrate off of one screen, but I can never really load it correctly. But here we go. Probably first things out of the gate we should talk about is good old US dollar index, world hegemony. Did see the euro coming off a big chunk here overnight as well. Some of the commodity currencies getting whacked. Canadian dollar coming off a chunk. So a bit of money flowing back into the greenback. Actually, learning more about the greenback. Gotta say, I think it would actually be handy for the United States of America to seriously think about that kind of world again. Now that interest rates are basically zero. But anyway, that's another conversation for another day. I think probably, we started off with this massive megaphone. There's your trading range. Where are we going to sort of settle down? I think we can now start to see the levels coming in a little bit crisper. Clearly, that is now the top end of our range in the short term. And that is our bottom. Did carve out a nice little empire and working our way lower. And now maybe we're going to carve out some railroad tracks here. You can see the railroad track lows from there a week or so ago. But until we break out of this range, we're just coiling, right? You can pretty much see the compression going on. So we will be building towards another event. What I'm a little worried about is we're actually starting to hear some really serious posturing going out of the United States of America right now, and states and the federal government at odds, which is never good. And of course, I don't know whether talking politics in this kind of environment is such a good thing. But, let's best wishes. Everybody try and keep a level head through this, and let's not let things get out of control. I just even tweeted this out just before we got going. I mean, just to give you a real visualization of how things are developing here. The economic data is now starting to come out, and this is the United States New York Empire State Manufacturing Index. And hopefully you can see we are doing some colossal damage to the economy here. In the short term, I don't think it's in our best interest to, be pushing to get the economy kickstarted back up and running. I think the key here is we've got to stop the bleeding. And what I'm worried about, of course, is they go and open everything all right back up. And in a few weeks' time, we see another big flare up of all this stuff. Versus just keeping it shut down until we've seen it totally beaten back down, and we can play from a position of strength, right? But we'll see what happens. Only time will tell. Right now, it looks to me like the market is sort of position squaring, getting ready for the next breakout or breakdown. And frankly speaking, I think it's a mug's game predicting which way this thing's going to go in the short term. We'll just simply follow the chalk marks, as they say. Interestingly now, if we actually start Ming out here or Wing out here in earnest, we can actually see bot setups start to set up one direction or the other. And, should this bot out one way or the other, then you look at your individual currency that you're interested in and start hunting setups appropriately. So that's our conversation about the US dollar index this morning. Interesting to see, and we kind of talked about this a bit yesterday. How is risk on, risk off going to act in this type of environment? Really the most interesting thing that is going on right now this morning, in my opinion, is what's going on in the crude oil markets. They did pull a nice little FU move overnight and took out these lows just by a whisker. But as you can see, they're firming price back up. And I get the distinct impression somebody really wants this thing to go out right around $20. Um, Through the daily brief, though, we took a look at things like the next contract out. Because keep in mind, this is a spot quote CL1 exclamation mark. The next contract out is actually trading at like $26 a barrel right now. So I have a feeling this is somebody's got their short and curlies caught in the ringer, and they're trying to keep prices depressed into that delivery. And like I said, as soon as this contract expires, you're mysteriously going to see crude oil prices actually gap higher here, which I find fascinating. Still think that we've basically established a pretty powerful ceiling on price here now at about 28 and change. And my hunch is now over the short-term counter trend rallies back up into these highs are going to be shorting windows. We'll see how it goes. And if you do see the market actually accept back above this 28.29, then we can start thinking about taking runs at things like at 38.2s. But for the time being, I definitely think that basically 19 to 29 is your trading range. Watching the equity markets, we had sort of talked yesterday. I mean, it was a big update yesterday, heading full steam towards these AB equals CD objectives. We also have not only the AB equals CD, boom, 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 boom. We also have this head and shoulders objective way up top here. Got this big juicy price gap up here, and good old Mountain Man sitting there, candle body highs, 78.6. Call me crazy, but I still think we could work our way up top here. And interestingly enough, I mean, if this is a top and the market is done, then we should see some sort of candle pattern, whether it be a fractal, empire, inside bar, horami, all that kind of stuff. Sometimes we can get reversal patterns that look like railroad tracks, where the opens and closes are almost exactly the same level with like no wicks at all. And in essence, that would signal a reversal if we close out here today, beep, and then go through this low tomorrow. So I don't even really have any sell signals here in the stock market yet, but I do see we're definitely enjoying a down day. And all they did was they brought price right back down against these previous lows in this candle open level there. And now, as that crude oil market is working its way back, it turns out stocks are working their way back. And interesting enough, we're following day trading programs on TRI. This one model that we're really liking recently is just simply hunting W's off 50 SMA crosses with 50 line breakouts. And actually, we even applied the same model to crude oil this morning, and sure enough, it has this long crude oil right now. Go figure. Basically risking against that FU low that was put in overnight. And interesting enough, look at the fight that happened here following huge bearish inventory numbers. So as I had said earlier, it sure looks to me like somebody really wants to make damn sure this thing does not go out below $20. But at the same time, too, the deferred contracts are a million miles away. But just a 2-to-1 off of this setup, it looks to me like we could rally back up to 21.5 if indeed we actually hold these lows. Now, remember, I've said this repeatedly. I don't mind if you're like a trader. Hey, Brian, I got 6 different assets. I trade the futures contracts I'm going to trade. But, I don't mind if people trade that kind of stuff in the crude, and really you're asset agnostic. You're just trading setups. But I've officially said this, and I firmly believe it. I do not want to invest in oil in particular for the next 10, 15 years. So trade it, don't date it. I'm not really that in love with the oil industry anyway. I thought it was fascinating, and I even put a tweet out earlier this morning kind of talking a little bit about what does a trader's life look like in trading setups. And I thought this was a fascinating analogy, and I put a tweet out to that effect. And we sort of talked you through this sort of past few days. This bot setup's still working. This bot setup's still working. I mean, it is. It just is what it is. It's a trader's life. And, ironically enough, half our job as traders is, just throw the position on if the setup says go. What the hell have I done here? There we go. And just live with the results, right? And really all you can do is just sort of, track whether it's behavioral issues or whether your setup sucks. If your setup sucks, okay, well, fine, find a new setup. If it's behavior, that's another issue altogether. And that's sort of the big, selling feature of our course and our school is trying to set you up so that you don't have behavioral issues. You don't have anxiety. You play from a position of strength. You trade setups. How well do I track my setups? That actually defines how good of a trader you are. Blah, 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 blah. Anyway, point of the matter here is this bullish setup happened to come in, and it was kind of funny. Did the whole walkthrough. Oh, I'm so smart. I'm so stupid. I'm so smart. I'm so stupid. Hey, look, I'm smart again. The point of the matter here is actually nothing's happened. And really, there's no comment on this trade. It's just working away, doing its thing. Ironically enough, that's exactly the same conversation about this oil trade this morning. Same thing. What are you paid here to do? Are you paid to actually have an opinion? Does anybody give a shit about your opinion? Not really. As a trader, you're paid to take setups. And, if you're right, you get paid $2. If you're wrong, you can lose $1. And just rinse and repeat and just keep going. So just yet another anecdote in two, ironically enough, two inversely correlated markets. One that both markets you're playing long. And interestingly enough, both setups are actually working here. Go figure. But this is obviously a day trader setup, and that bond is a position trade. But nonetheless, point of matter here, setups are setups are setups. Interesting how we had beautiful 50 SMA cross there on the Dow futures here this morning. You can see this 50 SMA cross came very far away from the bottom, so it's very tough to justify pulling the trigger there. But notice this 50 SMA cross, that actually came in right off the double bottom level. So you can even see 50 SMA cross, double bottom confirmed. There was 2-3 candles there where you could have gotten a fill and gotten in off of this trade, right? It even came back and tagged it nicely there. Mwah, kisses. And you can see the trade's just working away. You can see the nice W through the 50 line there as well. So actually a pretty good looking little setup there on the Dow here. So go figure. Anyway, point of the matter here, I don't think stocks have actually broken down just yet. We'll see how that plays out through tomorrow. And whether that does actually railroad track out. And if it does, then that is problematic for this bull thesis. Well, we'll see how it goes. Interestingly enough, watching the battles going on in crude oil this morning, with crude sort of spinning its wheels, trying desperately to hold on to those lows, you can see the gold market, and remember these markets often like to move in opposites. So the gold market is sort of spinning its wheels right now. And interestingly enough, you can make the argument, just on a short-term basis, and I think that's off of this chart. No. What did I do this chart, Kevin? You remember? I thought I did it up here. Not there. Oh well, I guess we won't talk about that today. Anyway, off your gold chart, you can see the Empire top. So basically, we've sort of said, and really this would imply that the crude oil has bottomed. And it starts, fractaling out to the upside. If this Empire's out up top here, then odds are we're probably going to have to do some backfilling. And you can see, this has been a pretty big rally. So just even simple things like 50% rules, probably going to come down, fill in this gap. And the irony of it all is we don't actually do really any serious technical damage. Where's 50%? There it is. Well, yeah, so we won't actually do any serious technical damage unless we actually take out this low here. So all of this area, that could easily be backfilled. So I'm not necessarily saying, go out and sell all your gold, get the fuck out of there now. Those longer, higher time frame players just sit and don't do anything. But, the slick traders, should it surprise us that Julian hopped off a lot of his gold up here because he wasn't liking what he was seeing? No, that shouldn't surprise anybody. And I think I had showed you, we did have some bullish bots and stuff working on the gold over the past few days, and a lot of them had, move stop to, where the hell's the damn chart? I always lose these charts. Oh, this is the one I wanted to show you. There is the fractal that I talked about in the daily brief. There's that recent low. There is that gap. Started this, and this is actually kind of cool because this is an inverted empire. So that was upside down. That set up the bull. And here you can see a verted empire. I don't know if this is inverted. Is this verted? I don't know how that works. Anyway, if we do lose these lows, then you can see there's a lot of open room. And look at this. This is what kind of bothers me. That is a big hole in the profile, and gee whiz, that happens to line up with that gap nicely there. So, not saying it's broken down just yet, but if you are a gold trader, you better be damn careful here. All right, so moving on with your little chart deck here. Risk on, risk off. Interesting how the bonds keep working their way higher. I mean, if this keeps working, then theoretically the gold will hang in here. If anything, if the bonds are working higher, we should see the crude softer, and we should actually see the stock market break down. So are the bonds a lead here? Or do the bonds run into some traffic and we have to roll back over, stocks hold in, crude holds in, and gold rolls over? Tough to say. All right, heading on over to the stock market in particular. Actually, I did a bit of buying in a couple of the VCIM names that I really like. TELO I've told you about before. There is a JUGR, Juggernaut Exploration, on the Venture Exchange, working some bids there. Those are VCIM names, though. Like, basically, I'm just buying where there's value in the venture cap space. Nothing to get too excited about. If I do get fills on the Jugger, I'll show you the chart. And that Tello I've already told you about lots. So, do with it as you please. Do I think that the momentum has come back to the junior market here? No. If anything, seeing the broader stock market a bit heavy here today, I also see heaviness in the junior stock market, and even more so than the senior market. Now, if we're lucky, basically this is carving out a nice head and shoulders pattern, right? So there's your shoulders, there's your head, there's your neckline, something along those lines. So if we're lucky and the stock market's okay, then we'll hold these lows and start to turn back up. But we had this inside bar reversal 2 days ago, and you can see how that's continuing on its way. If we break these lows, then it means more down to go. So I'm not really ready to actually even think about calling bottoms in markets until I see actual relationships showing, like this is what we call an intermarket analysis relationship. These kind of relationships showing me that capital is actually flowing back into the venture cap part of the market. Now that's the whole market. And on balance, a lot of the junior stocks have been kind of, But half of the reason why we like to run a diversified portfolio is you've heard me say time and time again, there's always a bull somewhere. And it turns out today, the bull is in the drone business. Look at that son of a gun go. Boom! So we've been interested in this drone stock forever. And hopefully you look at a chart like this and you go, yeah, okay, I can completely understand why that Beamish guy likes a stock like this. It's just, when they reorganize these companies, you never really know exactly how the bottoming pattern's going to look. This is half the reason why I like to do the nanny nibbles kind of strategy. And we did have a lot of people come in and start accumulating through here. Some people got doubles off on this pump here. Others didn't, and we're sort of like, if you put a bunch of money in here, you better hop off. Almost everybody was like, I'm not really in a big hurry. It wasn't a huge chunk of my portfolio, so I'm like, all right, they got pretty low share count. It's in a favorable industry. They're in the drone business. That's kind of the part of the market that I really, really like for the next 10, 15 years. And of course, now with coronavirus, what do you think drones? If you actually have a serious product that could actually meet sort of delivery standard needs, do you think your drone business might get a couple purchase orders? And lo and behold, look who just got some big purchase orders. And just imagine if Amazon comes along and says, you know what, your product works. We want to come into business with you. This stock might be 10, 20, 30 bucks a share in the not too distant future. So having said that, what do you think? A whole bunch of TRI people were very, very happy this morning. Obviously not a good idea to chase. And my hunch is what ends up happening here is at some point over the next month or two, we're going to calm down from all this sickness and virus, and we're going to start getting sort of business back to normal. And my hunch is, obviously this gap is just a million miles wide. if you did want to buy, I would just be nice and patient and work your bid right back down to the bottom of the gap. Probably take you maybe 6-8 months to get a fill. But, these are the kind of names that I want to be investing in. And really, anybody who's watching this and happened to take this trade and you're thinking about just walking away completely from the other story, I would highly suggest that you just cool your jets. Bang out, sell half, 3/4, whatever, at your double, triple, whatever. But maybe hold on to a bit of this because you never know what the hell's going to happen. And one might argue this is actually a gap and go. So if we actually go and take out this high tomorrow, you might see this son of a gun add another couple bucks. It wouldn't surprise me one bit. But having said that, we're not allowed to come in on the buy side here. But anyway, great to see. A lot of TRIers super, super happy today. Congratulations, everybody. Heading on over to the corn. Same sort of conversation probably as the stock market, and that's kind of what I had sort of said to the TRI community today. If that railroad tracks comes in on the S&Ps, my hunch is Bitcoin's probably going to head and shoulders out here and dump. It's interesting how I like to really watch symmetry studies, and we've been sort of mapping out what does this correction, this big rally up, then the market starts smiling at us. What are some fib levels, looking for natural retracements? And if this really was a big honkin' fractal, what would that fractal sort of look like? And that's what this study is. It's basically just a replication of this price range, just overlaid. And I kind of think the fractal midpoint is that candle right there. So, obviously, price didn't obey it closely, but not bad. We never did get these nutso insano move here, but there's a pretty big nutso peak here, and that sort of corresponded with that. This dump happened a bit earlier, but you can see sort of the double top. And the irony of it all is we're basically right on schedule here with price. What I would just simply say, again, I don't believe that the U.S. stock market has broken down. And if oil actually bottoms here, we might see the stock market take off here. Also, too, remember those options expiry stuff? I actually think the market wants to rally into Friday, but, that's another conversation. Point here is that usually these triangles and typically markets like to correct in a very triangle-y type fashion. Usually these triangles resolve about 2/3 of the apex. So I find it fascinating that when we did our back study from the middle of the cycle, gee whiz, what a coincidence, that dump or that resolution happens just about exactly 2/3 the apex of this triangle. Coincidence? I think not. So, if we do break and we close and you start seeing prints down here, well, I think we went and topped. Shitty. Boo. Hiss, hiss, hoo. But believe it or not, I don't actually think we're going to break here. Just like on the S&Ps, I don't think they're going to do that railroad track top. It's just my opinion, and of course, Brian, and you guys have been watching. This is the great part about doing videos every single day, is you see that actually a lot of times my opinions don't mean jack shit. Trade your setups. But my opinion, for whatever the hell it's worth, not much, I actually think they're going to F you, quick little head fake, and then ratchet it back up. Let's see what happens. But that's kind of what I'm thinking is going to happen here. But if we do start closing below this very well-defined support line, and you see repeated sort of prints here where we're below it, then I think that means we're done for the bull. Good part about it is, really, what are we talking about here? Maybe about a $300-400 trading range. If anything, I would just simply say, you know what? Let's let this resolve itself, and then we'll make a decision about what to do next. We don't have to be a hero and step in here. I don't mind, hopefully you can zoom in. I don't mind the lower time frame players, but understand, you got to be a professional. You got to have your trading plan. You got to know what you're doing. Don't fuck around because this is serious money. But I could understand, kind of like that crude oil this morning. Guys coming in at the bottom end of the range here and taking a shot against these lows. I could completely understand that. It's probably not something I would do. I'm a bit slower, methodical, show me divergence, show me structure, blah, blah, blah. But it wouldn't surprise me, especially if crude bottoms, S&P bottoms. You got this pretty hard candle body close there. This might be sort of Adam and then now a nice rounded W eve. That would be perfect. And then, of course, if you see a print, if these lows hold, if you see a nice print close above 6,900, and that makes sense, nice print 7,000, we're off to the races. So makes it pretty easy, really. Basically, print below 6,500, we're in the pooper. 7,000, boo, boo, boo. There you go. Nothing really new to report in alts. Like I said, the whole market feels like it's coiling here. I look at the little list. Nice to see Stratus perking up here versus Bitcoin. That BitTube I told you recently perking up versus Bitcoin here. Is this a function that Bitcoin's a bit soft versus these things actually being strong? I think so. But what it really says to me, and hopefully you see this right across the board here, these altcoins are just going sideways. It's not really like they're in a bull or a bear. They're just sitting there. And really, I might argue that if you can figure out an actual use case for your blockchain story, and they're actually legitimate, they survive sort of like things like the Trex cull and stuff like that. This to me, we're setting up the future now. Think like, a couple years down the road, I could easily see a lot of these names much, much, much higher. But, follow your plan. If you like W's, just wait for the W's to come in. It's not rocket science, rinse and repeat. But I really do think alts, and actually, it's a great example of this, right? Let's think about who is going to be the winners in tomorrow's technology, right? This is a drone business. We know drones are here to stay. We're probably going to see a lot of alts kind of do this kind of action, and all of a sudden, bang! Away they go! So anyway. All right, everybody. I think I'll leave the video at that. Sure hope you got some value out of it. All the best, and bye for now.